Hello and welcome to Business Insider with Mario Toneguzzi on YYC Business. Joining me today is Marshall Toner, who is Managing Director and National Lead of Industrial for JLL Canada. Thanks for joining us today, Marshall.
Well, Mario, it's always good to spend time with you. So hopefully you don't stump me with any tough questions today.
Let's talk about the industrial real estate market in Calgary. The Q1 report by JLL, which came out recently, showed vacancy rate dropping in the market at 5.3%, down 90 basis points from the previous quarter and 170 basis points from over the last two quarters. Tell me why the vacancy rate is dropping in this market.
Well, I think there's a couple of reasons in the Calgary market. Number one is the increased need for e-commerce space and ancillary distribution space that comes with that, and companies that are associated with e-commerce. And you know, the big A company, Amazon, as it's known as to my wife especially, and to me, but have taken a lot of space in the last 6 to 9 months, and they continue on that trend. They're not finished in Calgary at this point. And then a real surprise that came out of left field was the movie industry. And there's probably been 500,000-600,000 square feet of space that has been taken up by basically 3 or 4 companies in the movie production industry that we just didn't see coming. And there was a couple of reasons for that. One, I think, industrial space in Vancouver, where the vacancy is sub 2% and rental rates are through the roof, which has traditionally been a hub of for the movie production companies. So we had vacancy here. We had most of the space that they took was former, what I would call oil field service or manufacturing space. 3 of the buildings had cranes in them, and they just, they had the ceiling heights that they needed. They had the grid pattern that was needed. They had the parking that was needed. They had a number of boxes that were checked by these buildings. And then the provincial government, I think, has put some sort of incentive package or tax deferral package or something to do with tax that has caused movie production companies to come to Calgary. So, that was, like I said, 500,000-600,000 square feet that we just didn't see coming. So, our absorption, I think, was 1.6 million in Q1. And, arguably a third of that was from the movie production industry.
Well, let's talk about the absorption. As you mentioned, 1.6 million square feet in Q1, well above the 5-year historic average of about 580,000 square feet. Where else is that absorption coming from? Like, what kind of industries or sectors is picking up?
Yeah, without drilling down too far and getting into real specifics, the distribution market is really driving that at the end of the day. If you take a trip out to the Balzac area, which basically feels like you're just driving from Northeast Calgary into another area of Calgary when you cross over Stoney, there's a lot of activity going on out there with large box distribution users. There's been a couple of big deals in Southeast Calgary as well. So, it's e-commerce related, distribution related, changing in the retail market and the buying habits of the general public have caused people to have more warehousing, have the items ready to go and closer at hand. And that is really, at the end of the day, what's driving our industrial market, not only in Calgary, but for sure in Toronto and Vancouver and Montreal.
And what about the amount of space that's under construction? I see that there's 2.4 million square feet currently. Is that a pretty robust number, or is that kind of an average number for what you would expect in this market?
Well, that is a very robust number. And, it wasn't that long ago, it was doom and gloom in Calgary. I mean, the office market hasn't recovered, obviously, but the industrial market, the vacancy was up close to 8% not that long ago. And a lot of the developers who all build on spec. I mean, that's the way it has to be done in Calgary. You can't put a sign up and say, hey, we're going to build a 500,000 square foot warehouse and let's do some pre-leasing. It just doesn't work that way here. And so, those guys are there was a lot of what I would call stagnant product that was sitting there for the last probably year to 2 years, maybe 2.5 years. And all that has been churned through, or most of it has been churned through, I should say. And there's 2 or 3 developers in the city that feel that it's time to be building on spec again. So, Highfield is building on spec. Quadreal is building on spec. Hopewell is building on spec. And then One Properties is probably going to think about building another building because their last big vacancy is very close to being filled. So there will be a number of new buildings that are coming out of the ground or are already coming out of the ground.
And these people, let's keep this in mind. These people aren't just building on spec for no reason, right? They obviously have the optimism and the knowledge out there that this space is required and needed, right?
Well, for sure. I mean, they're pretty wise. They follow trends. Most of them, well, all of them have been in the development game in Calgary for a long time, and so they know when they get to a certain vacancy within their portfolio or within the new product that they've built, it's time to build another one. And I don't see any buildings that have been up for 5 years that are vacant. So they obviously know what they're doing, and the market has helped. I mean, the Canadian, North American industrial market has been quite strong. The Canadian market has been quite strong, and the Calgary market has been quite strong. And in Calgary, that's in spite of really crappy oil and gas times. And when you look at, as I mentioned earlier, the downtown core that's running 25-30% vacancy, you would think our city is turned on its ear, but it's not. The industrial market is actually buoyant and quite active. And it's trending towards more of a landlord's market as our vacancy continues to drop.
And as you look forward for the rest of the year, for the final 3 quarters of this year, what's the outlook for the industrial market in Calgary?
Well, there's 2 or 3 large tenants that are reportedly or rumored to be floating about. And if those guys land, we'll have continued good absorption, and we'll have developers wanting to build more buildings on spec. Most of these guys all have large land holdings, Mario. So it's not like this is a 2021 phenomenon. They have to stop building. As the market continues to absorb the space, they will continue to build, which is great for construction. It's great for our city. And it's good for anyone who's involved in the industrial real estate market.
Like yourself.
For instance.
Well, thanks a lot, Marshall, for joining us today.
You're welcome, Mario. Anytime. Always enjoy spending time with you.
All right, super. That was Marshall Toner, who is Managing Director and National Lead of Industrial for JLL Canada. This has been Business Insider with Mario Toneguzzi on YYC Business. Thanks for joining us today.